The McAlvany Weekly Commentary, covering monetary, economic, and geopolitical news events. Now here are Kevin Orrick and David McAlvany.
Welcome to the McAlvany Weekly Commentary. I'm Kevin Orrick along with David McAlvany. And David, I know you've got a couple of points you want to hit right off the bat.
Well, I'm just going to cover a couple of incidental things. This is a very exciting week, Kevin. We've got Jim Deeds back with us, and no lack of things to talk about. Wachovia, who was out of the woods up until yesterday, is back in the woods, $8.86 billion in losses, and they're going to cut about 10,700 jobs. They're not the smallest bank. As you know, they're number 4 in the country. SunTrust is on the skids. They have, believe it or not, the least amount of cash of any large U.S. bank. And so as we look towards entering into the 5th or 6th inning of this game, you kind of want to look at who's on your side, who's not, who's taking this seriously, who's not. At least Wachovia is shoring up their balance sheet. They cut their dividend 92% from $1.50 to a nickel, from $1.50 to a nickel. So that'll save them about $3 billion a year, and they'll need every penny of it.
You know, we had a guest on a couple of weeks ago, Ambrose Evans Pritchard, and his latest article in the Telegraph says the global economy is at the point of maximum danger. He says it feels like the summer of 1931.
And it's interesting, Kevin, this is a very active market for those of you who are following on a day-by-day basis. This is what I would call a short covering rally. Out of 150 stocks with the heaviest short interest, they've come up about 15% in the last few days, whereas you look at stocks with very small short positions, they're up on average about 2%. So,
David, explain a short covering rally. Explain to the listener what a short is and what has to happen if they need to get that thing taken care of.
Well, most investors, if you're interested in buying a stock, will go out and buy 100 shares of General Electric. And you buy the stock, and that's what you say, going long. You're long the stock, 100 shares of it. You're betting that it's going to go up at some point, and it'll be a profitable venture for you.
Right.
Well, if I think the stock's going to go down, I can borrow from you the stock and pay it back later at a lower price and pocket the difference if, in fact, the stock has dropped.
Yeah, how money's made on the downside of the market by people who want to speculate that direction.
Right, so there's been a ton of people shorting the market, and they've been making money. Now they have to actually pay that stock back.
So they have to go buy the stock.
Correct. They're buying it at a cheaper price. They have made money, but that creates activity. It creates a floor in the market.
But it doesn't change the overall. We've talked about long-term trends for a long time.
No.
That's not a trend changer in any way.
And that's why I would define this as a bear market rally and a short covering rally at that. So, and again, it shows up in the statistics. We've only had about a 2% rise, high drama on Wall Street the last few days, but only about a 2% rise in the stocks that didn't have a lot of short covering.
Well, of course, CNBC and all the financial networks are just going crazy. It's green all over the screen instead of red.
So that's a little bit of the trees. In addition to the trees, that's on the bank front. The central bank front, our government's raising $58 billion, where we have debt issuance this week. We're not talking about this month. We're talking about this week of $58 billion. $6 billion in 20-year Treasury tips, $21 billion in 5-year notes, $31 billion in 2-year notes. We're raising money like our banking system is raising money. That's enough of the trees. Let's go back to the forest. And Jim, I've got a lot of respect for your opinions on the big picture and on little things as well, the details. What do you think? Where are we at?
I was interested in what you just said because I've been thinking about this just the last day. Back in the 70s when I got interested in gold, actually I got interested in 1968, and I was a stockbroker then with Dean Witter, but back in those days I got interested in gold because I figured out that saving money in the bank didn't make much sense, at least for our family, and secondly, the money lost value. But I was thinking of the great difficult times we went through in 74, and I used to get the Federal Reserve Bulletin down in St. Louis, and at that time, the Treasury, our Treasury, was monetizing our debt. They were creating Treasury bills, and then the Fed was buying Treasury bills and allowing the Treasury to print money and keep going. And amazingly this time, with what you just said, it's fascinating because during the last 3 months we've seen it happen. This time, the Fed is monetizing the debt and the bankruptcies in America. They're not creating new money. They're just coming up with money or with T-bills that they lend to monetize the great bankruptcies or the great decrease in bank reserves that are going on. Fascinating time.
Yeah, it is. We look at the M3 numbers, and they disappeared off the chart over a year ago. We really don't know how M3 money supply is growing, but if you reconfigure it, it is on an exponential basis, between 16 to 17%. At what point do you feel that we've transitioned from just mild inflation, which we're told we have, to a super or even a hyperinflation?
Maybe we've talked about it enough, but I never think so that's why it keeps showing up. Hyperinflation, of course, is where prices double every 2 weeks or every month, and it's a whole different game than what some people might think. They might think hyperinflation is just 10 or 12 or 15% or even 20% inflation, and hyperinflation is much greater than that. So that's the answer to your question. When people lose faith in their money and in the buying power of their money, when all of a sudden they look in their wallet and say, I don't trust this anymore. It's a matter of trust. And that's going on in Rhodesia today. Food prices over there double every 2 weeks. With those types of things happening, people give up on money and just go to something real. And that's happened, of course, over and over in different societies and different nations when people finally give up on trusting the money. Right now, your question, of course, is the U.S. government in their numbers come out with about a 5% inflation rate for our country. And everybody knows they've conveniently taken out food and they've conveniently taken out energy. As a result, I know where I spend my money, and I spend it filling up my gas tank and buying food at King Soopers. So the point is, that's really a lie to start with, and people have chosen to live a lie. I guess that would be my first answer. So the question back to you is, how much longer do Americans feel comfortable living a lie?
It's interesting, Jim. We talked about last week the fact that the actual cost of buying insurance against a Treasury note default in England doubled over the last couple of weeks.
Right.
And so it seems internationally that people are starting to lose faith in the dollar. No one would have thought of a Treasury note default a few years ago, and now the insurance against that default is doubling. Wouldn't you see that as a sign of that lack of trust or that loss of faith?
Right, Kevin. That's exactly right. Doug Nolan always has a great scan of what's going on in the world, and you could say, well, maybe the wealthiest people, at least some of them, are cued in a little bit better than the rest of us as to what's really going on in the world. And a little squib in his latest bulletin said the price of a 10-carat diamond on the world market, 10-carat diamond sells for $1 million or more, and these were perfectly clear diamonds. They were good ones. But that price has gone up 76% since the first of the year in world markets. That's on the edge of hyperinflation in the diamond market. If you've been watching the old masters trading at Sotheby's or any of the paintings, which again, historically, people store their money in one-of-a-kind items for the long term that they can use 10 or 20 or 50 years down the road to retain the value of their money, and you can see those things happening right now.
Jim, it's also happening in the extremely high-rarity coin market in Europe. Drew, as you know, has been going to these auctions around the world and picking up coins where there's 1 or 2 or 5 maybe of the kind, maybe they're 200 or 300 years old. But those coins have sat relatively dormant for years, and now, each time he goes to the auction, he's seeing these things sell at 2 or 3 times what they thought what it was going to sell for. This is a recent phenomenon.
This is amazing. When you read about, we go on and we may go off the subject, but when you read about John Law and what he did in France and the hyperinflation that France finally had with John Law at the helm, and he got run out of town, and when he was leaving in his carriage, they took all of his gold, but they allowed him, amazingly, and must have been a pretty bright guy, to take all of his old French masters and all the old paintings that he had stashed in the back of the carriage. And he lived on that happily ever after in Spain after he had left France. And I think this is fun in a perverse kind of way because hyperinflation, inflation, governments that might lie or tell stories, they're just nothing new. There's nothing new under the sun at all.
So do you think they're going to allow Greenspan to keep his old masters and not actually put him in jail when they finally figure out what happened?
It's also funny, isn't it? I think that goes on to maybe David's question, and we've talked about this a little bit before. Since it's happened over and over again, actually the responses to the game are really simple. And David and I talked about this briefly yesterday. The responses are that you need to do something ahead of the time when the rest of the crowd being your American fellows, find out that they're really in hyperinflation and they don't want their dollar bill in their wallet this afternoon. They want to get rid of it this morning. And if you've second-guessed that by being ahead of them and place your money or your savings or your wealth in something that might have a longer-term view, you escape that problem. And it isn't like it's an end of a world or a doom and gloom philosophy. It really turns out, and David and I talked about it yesterday, turns out that most hyperinflations, when you study them, and they've come often. I mean, they had them in China back